you obviously have to have a place to live. So that's how I've diversified. Without any doubt, most of my wealth is held in physical gold and silver, mostly gold more than silver.
Silver and gold must have assets in your portfolio. It's always a good idea to create a diversified portfolio. This includes stocks, bonds, real estate, and precious metals. The best time to invest in gold, silver, platinum, or palladium is when the stock market is strong and precious metal prices are at their lowest point, so investors can reap the rewards of a recession. It's a common assumption that gold and silver prices will fall with the market, and if so, wouldn't it be better to wait to buy them until the dust has settled? But let's assume that investors are right and that our precious metals hold their value or even increase in value. But during a depression, is it better to have gold or silver? In today's video, we'll tell you why Lynette Zang says that gold and silver are the must-have assets in our portfolio. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. There's practically no more purchasing power in the currency, but most people just don't realize it because they go to the store and buy things, and the loss of purchasing power is accelerating. Still, the public continues to buy. They don't seem to be affected by inflation, and we think that's a lot of nonsense too. It looks good because they pay these inflated prices. We believe there's going to be an open confiscation because our whole life has been a secret confiscation for inflation and price suppression. Most of our wealth must be held in physical gold and silver, especially gold more than silver. There's really a battle royale that's going on between central banks and governments and their CBDCs to remain in control of the monetary system. But governments don't like competition, so they clamp down on the price of gold and silver. We've already begun to enter the hyperinflationary phase. Yes, I don't believe that inflation is temporary. We don't think it will really go down. It may seem like it's going down a bit, but we think they're going to be the same very difficult realities for most people, sadly. It's easy to look at gold and see the tangible value. Keep in mind, however, that the price of gold goes up and down like other assets. Price movements are not always based on intrinsic value. The perception of market movements, the strength of the US dollar, and other factors influence the value of gold. Silver can also be considered as a good portfolio diversification tool with a moderately low positive correlation with stocks, bonds, and commodities. However, gold is considered a more powerful diversifier. It's always been uncorrelated with stocks and has had very low correlations with other major asset classes, and for good reason. Unlike silver and industrial-based metals, gold is less affected by economic downturns because its industrial uses are quite limited. One of the reasons to include gold in your portfolio is to hedge against inflation. As a vehicle for storing value, gold has done quite well over time. Inflation can erode the purchasing power of a dollar, but gold can help protect against that loss in value. Gold prices often move against the dollar, so if the dollar weakens, gold is likely to strengthen. However, even when gold isn't rising at a rapid rate, it's still considered a pretty decent way to avoid losing to inflation. If you don't think bonds and stocks offer enough diversity, adding a little gold or silver can help you feel more comfortable. Gold often moves in the opposite direction of stock market, so if the stock market goes down, gold often goes up. If you want to balance your portfolio, gold can be a way to do this by diversifying your assets in a way that partially protects you from a market event. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.